Now, there's a meeting going on my stage at the moment between three of our presenters for this segment. I haven't seen each other for a while. That would be because our first presenter is living a long way away in the presentation stage up the back. He's up near the coffee. Have you been up the back to the coffee yet? Made the trek all the way up the back there? You would have met this fellow already. You would have had a good chat with him, I'm sure, because he is a bit of a chatter. We've got an hour and a half in this session, and then we are going to have a little cocktail party outside, and that cocktail party today is brought to you by one of our big sponsors, by ABC Gold Refinery. I tried to get Steve and Ben, the two security guards, to come in here with one of the gold bars, because they've actually got, I think it's 4 gold bars in their little case out there, which is around $5 million worth of gold. I said, look, can one of you just come down? We'll play a bit of fun, and we'll bring the gold bar down and show it to you. And the people who are personing the booth out there said, no, I need 2 security guards at all times. So I thought there was just one there. There was one hiding behind like a stand there somewhere. So there's always 2 of them watching us. But what I do have is some chocolate. So I took that instead. They didn't seem to chase me for that. Anyway, that's irrelevant. Do stay afterwards, an hour and a half of this session, and come and join us for some drinks and have a chat with some of our presenters, like this fabulous human being here. Now, he is in the thick of one of the biggest ever drilling programs by a junior explorer in Victoria. It's a really interesting story because they are a junior explorer with money. Money to explore. How did they get that? Why? Those of you who've been following this story will know why. Those who are new to the party, the fellow to explain it to you is Tim Markwell. Tim is the MD and the company is Falcon Metals. Please make him welcome.
Okay, thanks Christina, and thanks for the introduction, and thanks to the RIU for the invitation to present here at the Resources Roundup. So for those of you who don't know Falcon Metals, we listed in December 2021, and that was via a demerger of a company you may have heard of called Chalice Mining. So back in 2020, Chalice made a pretty amazing discovery at Julimar, but prior to that discovery, their flagship asset was the Pyramid Hill gold project in Victoria, which is a pretty substantial asset on its own. But given how much work they had to do at Julimar, which is a world-class discovery, they made the pretty sensible decision to spin out Pyramid Hill, put in a Victorian-based management team, and we raised 30 million on the ASX, which is where all our money came from, and in December 2021, and away we went. And before I continue, that picture on the screen there, that gold is from a gold we panned from a drill hole we drilled at our Ironbark East prospect at Pyramid Hill, and we announced that last year. And that's just an indication of what you have in Victoria, which is high-grade gold like this is, which is what we're all chasing. Okay, there's a standard industry disclaimer, so please read that at your leisure. Okay, so Falcon Metals, our flagship asset is the Pyramid Hill Gold Project. It's a very large strategic ground position in Victoria, in the Bendigo zone, one of the most prolific gold belts in the world. We're doing, as Christina said, we're doing a very large drill out. We've done more than 60,000 metres of air core drilling this season, which is as big as anyone's ever done that I'm aware of. So it's a very major exploration program. And thankfully, we've been getting good results, which I'll go through in a minute, especially at our Ironbark East prospect. But we've also discovered 2 new trends, which we're also chasing. So that'll form the basis of my talk today. We do have 2 assets in Western Australia. I won't go through those today in the interest of time. There's a couple of slides in the appendix at the back if you're interested. And please do make the trek down to the coffee deck at the back of the auditorium if you want to go through those or anything else to do with Falcon. So a quick corporate snapshot. So our largest shareholder is Tim Goyder, who you may have heard of. So he's obviously the largest shareholder of Chalice, so inherited a big position in the IPO, but also put some money in as well. And we have two corporates that are substantial. We have Franklin Templeton, which is a very substantial fund out of the US, and also the Goldman Sachs Group. Our share price was last trading in the mid-30s. I think it was around 33 to 35 cents sort of range. Gives us a market cap of about 60 million. But importantly, we do still have over 20 million of cash left at the end of March. And that's a decent treasury position for a junior explorer. And I think the reason is you really do need that to do exploration properly, especially where we're looking undercover in Victoria. You do need a decent cash balance to be able to do that properly. You can't just do it in dribs and drabs. So that's why we're able to do such a large drilling program and really focus in on vectoring in on that high grade gold. So the board of management, a few of these people you might know from other companies. There's Mark Bennett, who's our chairman. Mark's a bit of a legend in the exploration game. He's made several major discoveries, culminating in the Nova Bollinger base metal project when he was at Sirius Resources. That got taken over by IGO for just short of $2 billion, which is it was a pretty amazing discovery at the time. So Mark's got a tremendous track record. He now lives in Melbourne, so it's great to have someone of Mark's experience and success and track record available. And it's great to have Mark drop in the office and share his views on what we're doing. So he's a great chairman. We also have Alex Dorsch on the board. You probably know him from Chalice. He was MD of Chalice when they discovered Julimar. But importantly for us, he was the guy at Chalice that originally pegged the Pyramid Hill Gold Project. So he's got a lot of passion for Pyramid Hill. He was the guy that started it inside Chalice, and he obviously elected to stay with it and devote some of his time to this. So it's great to have Alex's involvement in Falcon going forward. Rounding out the executive team with myself, we have Pradeep, a very experienced company CFO, ex-PwC. We also have Doug Windsor, our exploration manager. He's at the booth at the moment. He's a Bendigo born and bred geologist, which is obviously good for us. He worked all around the world with BHP and De Beers, spent the last nearly 10 years with IGO looking for gold and base metals in the north of Western Australia and the Northern Territory. But he's come back to Bendigo with us for the IPO, and he's really driven to find the next major discovery in Victoria. So it's great to have an exploration manager with that experience in Bendigo and also a world view as well. And he lives a few kilometres from the project, which is pretty handy. Got big thumbs to use this thing. So this is Pyramid Hill. This is what a day of exploration looks like at Pyramid Hill. So we're basically drilling on wheat paddocks, which is actually pretty convenient. We don't have to cut down any trees. We can pretty much drill wherever we want. It's very important to have good land access and good relationships with farmers. You have to be a part of the community where we operate, and we do have land access for everywhere we need to drill, which is tremendous. These are broadacre farms, so very commercial farmers. They understand it, and we do have very broad access agreements, which makes life quite straightforward for us. We're also operating under low impact exploration, so we can't do anything to the ground other than the drill hole itself. No sumps, no holes, we can't leave sample there, no water, no drilling mud, nothing. So we've got to operate very cleanly and keep everything contained. And as long as we do that, and you know, the farmers are very happy with having us there, so it's great. So the opportunity with Falcon. So this is a map of the Bendigo zone in Victoria. So this is one of the world's most prolific gold fields. And the important feature of that is, well, there's two features. One is our dark blue, the dark blue areas are our permits. So you can see we dominate the Bendigo zone in our ground position. It's a very large ground position, more than 5,000 square kilometres. And also that red dashed line, that's the boundary between the outcropping Castlemaine Group sediments that host Bendigo, 22 million ounces, Fosterville, nearly 9 million ounces, and I'll just touch on Fosterville in a minute. So a lot of gold's been mined below that red dashed line, 60 million ounces. But above it, virtually nothing. And that's because there's some Murray Basin sediment that covers the same rocks that host Bendigo and Fosterville. So that's the opportunity with Falcon is to get a large enough ground position to be able to systematically explore this ground with air core drilling and try and find the next major discovery. So we're looking for the next Bendigo or Fosterville. We're not looking for a small deposit. We're looking for a major system. And you do need a large ground position to do that. So that's what our story is. I mean, the Victorian government's own study, that they think that there's estimated there's 32 million ounces of undiscovered gold north of that red dashed line in the Bendigo zone. So there's a very big prize there indeed. We have the biggest ground position there, so that gives us the best chance to do it. Plus, we're the ones really actively exploring there at the moment. And, you know, our projects cover literally hundreds of strike kilometres of prospective structures under that cover. So just on Fosterville, this is really interesting what's happened with Fosterville, and it is talked about a bit, but just to remind everyone. So there's a long section there through the Fosterville gold deposit. That yellow zone there is the Swan zone, which is where they hit the jackpot. And this graph just shows the reserve growth over time as well as the production over time. From 2012, it was sort of a mediocre gold mine, but you can see the grade was just sort of creeping up as the mine got a bit deeper. A company called Kirkland bought it in 2016 and then really hit the jackpot. They drilled deeper in the mine, hit that Swan zone, and suddenly their reserve went up to 2.7 million ounces at 31 grams. So for a little while, it was the highest grade, most profitable gold mine anywhere in the world, which is quite extraordinary. And if you're mining 600,000 ounces a year at under $200 an ounce cash cost, you're making an awful lot of money. So this led to a land rush in Victoria. We got in early, so our ground was picked up in what we think are the best positions because we acted so early, and that's why we've ended up with the ground that we have. But it's a real reminder of what the prize is in Victoria, because people seem to have forgotten that there are very high grade, very substantial ore bodies still to be found in our part of the world. So our projects, so the one that's been we've been doing the most work on and we've been putting out the good results on recently is our Ironbark prospect. This was an interesting one because it's not quite like Bendigo or Fosterville because it's hosted in diorites. So there you can see there's some magnetic highs there. They showed up in the low res regional data. This is some high resolution data we did recently, but there were some magnetic highs there. So we did some soil sampling across it, got a bit of a gold sniff, went back in with some air core rigs, got primary mineralization with the air core drilling. But importantly, it was hosted in diorites, not sediment, which is what you normally get in this part of the world. Now that's actually quite a good thing because there's some very large, very high grade deposits in Victoria that are hosted in diorites. And the ones we like to talk about are in the Walhalla Woods Point goldfields, and there's a deposit that was mined a long time ago now called Cohen's Reef, and that was 1.5 million ounces at 32 grams hosted in diorites, which is pretty extraordinary. So we were actually quite excited when we realised we had mineralised diorites on our hand. So we've now discovered 5 of these diorites, and the one I'd like to just focus in on is the Ironbark East diorite, which is over here where all that drilling is. So in February, we announced some infill air core results. So we got 12 metres at over 6 grams, including 4 metres at nearly 18, with one at over 52, 7 metres at nearly 3, including one at 14, and 3 at 5, including 2 at 8. So they're pretty good air core results, some very high grades in there indeed. But what the important things are, there's two points. One is we now have a high grade trend that goes northwest southeast for over 500 metres. So that's what you want when you're doing air core drilling. You want to define a trend that you can drill with a diamond rig. But also this was primary mineralisation in quartz veins. This wasn't weathered material. This is primary mineralisation. So that gave us a lot of encouragement to send in the diamond rig, which is what we did. So in February, we sent in a diamond rig and we did 5 diamond holes all around that diorite. And you can see those red triangles there are the diamond holes we did. We're waiting on results for those. We probably get those later this month. So we're quite excited about what we might see in those diamond results. We've got our fingers crossed that the assay gods smile upon us. And we also did a few, we did 1 diamond hole out here. So that hole there is a new diorite that we discovered in our air core drilling. So we didn't know that was there. It didn't show up in the magnetics, but it's definitely diorite. It had mineralization in it. So we drilled a diamond hole there as well. So we'll probably get the results for that hole a little bit later, sometime in June. But so that's something to look out for, is our diamond drill results hopefully later this month. So very interesting prospect indeed. We also have 2 more traditional Bendigo style trends that we've discovered. So we announced these ones just at the end of April. So this is our Wandoo target. Now Wandoo is interesting because it's so close to Bendigo. This is only 20 kilometres due west of Bendigo, and it's quite extraordinary that with the work that we're doing with this air core program that we're doing, we're able to discover new anomalies so close to one of the world's great gold mines at Bendigo. So we did some drilling here in 2021, very, very wide space, first pass drilling, and we benchmarked that against all the other places where we'd done similar drilling, and Wandoo was the one that really stood out. So we went and did some infill drilling here at the start of this year. We did it on 140 by 800 metre spacing, very wide spaced air core still. Unfortunately, we got some very nice results, and including some quite coherent trends. And this one on the eastern side here is more than 1 kilometre long, and importantly, it had quite a good result of 6 metres at nearly 2 grams, including 2 at 3.6, and that last intercept of that 2 metres ended in mineralisation, so open at depth, because obviously the air core can only drill until it gets into the hard rock. Now that's quite a good result for that level of drill spacing. So we've gone back in here and drilled it straight away. We've done a whole lot more infill drilling, as you can see there. So all those blue dots are our infill drill holes. We've only just done them, so we're waiting on results, and I suspect we'll get those results sometime in June. So again, that's something to look out for, because we think they're quite good results for that level of drill spacing in it, and in the elephant country, very close to Bendigo. And a similar story with Banksia. This is a little bit further to the north of Wandoo, but still quite close to Bendigo. So we've got 2 trends here, one of which is nearly 3.5 or over 3.5 kilometres long. And that's quite important because you do need a big footprint to find a Bendigo or a Fosterville. You need that 3 or 4 kilometre long zone, like the Fosterville footprint is about 4 kilometres, for example. So that's what you're looking for. So these are still very wide space drill programs. We quite liked what we saw at Banksia. 20 metres at 0.44 is very good for this wide space drilling. So we've gone back in and we've done our infill already, like Wandoo. We can act quite quickly. So we've drilled quite a lot of infill in and around those good results. And again, like Wandoo, we'll probably get those air core results in June. So there's plenty of news still to come for Falcon with all this infill drilling that we're doing. So just stepping back to the bigger picture, you can see this is all our tenement ground. There's Ironbark, there's Banksia, there's Wandoo. Those blue dots are the drill holes where we're still waiting for results. So we will have the diamond results coming for Ironbark and the air core infill for Banksia and Wandoo. But we do have a big ground position, and we do have to keep looking for the next prospect. We want to keep generating new targets. So you can see up here in the north, we've done both first pass exploration and a little bit of infill because there was a line drilled there. So we're doing constantly doing drilling, following along these major structures that go north from that Bendigo and Fosterville cluster. So those results will probably be out in June as well. We're going to keep that regional drilling happening. We're doing that right now. We have 2 rigs drilling over here at Rochester, so we still have 2 rigs active, which is quite fortunate because it can get quite wet this time of year. So we're drilling on roadsides because the paddocks are under crop, so but we're still able to keep the rigs turning, which is quite important. So we'll be looking for calcium group stratigraphy hosted prospects, which are where there's shallow soil, shallow cover, we'll do soil sampling, and where there's deeper cover, we'll do air core drilling, and that'll be sort of up to about 120 metres depth of cover, because that's where you can feasibly get to with an air core rig in a sensible way. We'll also obviously keep looking for diorite hosted targets. Diorites are great because they show up in the magnetics. So we did a drone survey of magnetics late last year. That has generated some new targets that could be diorites. So we'll be following up those with the air core rig as well. So we're going to keep that air core rigging turning, and I think hopefully we can keep drilling those with that air core rig until June, and then we'll take a bit of a break. So this is our timeline. So it really just reinforces what I've said. A very active drill program at the moment. More than 60,000 metres so far, including some diamond. Then there'll be a bit of a break from June. We'll still have assays coming in probably till at least July, and then we'll get the rigs turning later in the year, hopefully following up on some, fingers crossed, some good results. We'll do a bit of work in Western Australia. We've got a soil sampling program at Mount Jackson starting probably from next week. But the important thing with Falcon is we are fully funded, so if we do get good results, we can step up our activity straight away and send in more rigs, which is what we've been doing. So it is good to have that flexibility without having to go back to the market. So just finishing, look, we've got a great team. We've got a history of company making discoveries. We've got a very large strategic ground holding in Bendigo, more than 5,000 square kilometres, and a major drilling program that is still going on with results still coming through. And fortunately, some of them have been pretty nice, like those Ironbark results from February. We also have some work done in WA. So, and with our cash balance, I think that makes us a pretty good bet with exploration. So thanks very much.
Thank you very much, Tim. And for those of you who actually wonder why I don't speak straight away when they finish as well, we try and clip them nicely so we can put those talks up for you, the ASX, and also onto their various websites. I like the little chat about elephant country. We like elephant country, don't we? We like being as near to that as humanly possible. Right, this is an interesting headline. I think I'll use this for our next presentation as he comes up. Rumble Resources confirms Irahidi as one of the largest zinc sulfide discoveries globally. So to expand on that statement, the Rumble Resource and expand on the Rumble Resources story, the fellow that we've got up here is the MD. His name is Shane Sikora, and he's been pretty happy of late. So let's find out more. Would you please make him welcome?
Thank you, Chrissy, and thank you everyone for coming along to hear the exciting developments at the Irahidi project. As Chrissy said, we recently announced our globally significant maiden resource, which is pick-and-strained and zinc sulfide dominant. It's 94 million tonnes at 3.1% zinc and lead with 4 grams silver. But within that, there's contained metal of 2.2 million tonnes of zinc, 0.7 million tonnes of lead, and 12.6 million ounces of silver. It's a significant resource. What that lends itself to is a large-scale, low-cost, open-pit mining proposition in the premium mining jurisdiction of Western Australia. And it represents one of the largest zinc sulfide discoveries in the last decade. And it's never been a better time to make a zinc discovery. We're highly leveraged to the global renewable energy transition. What's really exciting about the deposit is that we believe there's exceptional resource growth and Tier 1 scale potential. To date, we've tested less than 35% of the unconformity, which goes for 45 kilometres, which hosts those deposits. There's high-grade MVT style deposit type targets below the known mineralisation, which haven't been tested to date. We believe we have the potential to get to that supergiant category of over 300 million tonnes plus. So really, we are just at the tip of the iceberg of what this could be. And late last year, we put through our excellent metallurgical results where we actually had high recoveries and marketable concentrate grades, which support a potential low capex and opex environment. And it also has great optionality. So whilst we have the 94 million tonnes at 3%, we also have a higher grade, lower tonnage scenario. We've also got a significantly higher grade 460 million tonne resource that could be beneficiated and upgraded, which we'll touch on as we progress. This is just a bit of a corporate snapshot at the moment, circa 140 mil market cap. We're getting some great research from Brad Watson from Bell Potter, and we have got a significant team that's made discoveries and mine development in its own right. We've got Peter Venn, who puts 10 mines into production across Africa and Australia. We've got Brett Keeler, head of technical, who was a significant discoverer, twice AMAC Prospect of the Year. We've got Jeff Jones, ex-MD of GR Engineering, which is a premium mine builder in Western Australia. And we recently brought on Trevor Hart, who was the CFO of Develop, who was instrumental in actually bringing in the Woodlawn zinc deposit to that company, and also $400 million in underground mining contract services. So we've got a really strong team to deliver Irahidi, but we're going to continue to grow and expand on that board and management as we progress. We made this discovery on the 19th of April 2021, and 2 years to the day we announced our maiden resource, and that was made up of 658 holes for over 100,000 metres of drilling, which was an incredible effort considering all the things we were dealing with in regards to COVID and other scenarios. It's zinc sulphide dominant, it's up to 10 to 1, and as I mentioned before, one of the largest zinc discoveries globally in the past decade. It has great access to major highways, power, rail, ports, and a mining workforce. This is just a bit of a snapshot of the resource. I want to make note that this is pit constrained. We had an independent group called Aurelia looking at logistics, processing and mining scenarios. So this is a constrained resource. What you'll see there is the 94 million tonnes at 3.1%, but we've also got 41 million tonnes at circa 4%, 12 million tonnes at 5%. So there is that potential to high grade the resource if we desire to. But there's also that 460 million tonne resource that could be beneficiated and upgraded through a pretty simple process, which I'll touch on as we go. There is exceptional resource growth potential within this resource. What you'll see here is the Chinook deposit, which is outlined in the yellow to the northwest. We've got the Tonka and Navajo deposits, which sit to the southeast. There is significant potential to grow the resource in between the Tonka and Navajo, and also Tonka and Chinook. And those resources are open in all directions as well. This is just a bit of a snapshot of the Chinook deposit. You can see, we can clearly see there's some high grade components to that, and there are those feeder zones that we've been targeting. We've got over 2.3 kilometres in the Callatan feeder zone. We've got over 2 kilometres in the Chickaman feeder zone as well. So whilst we're targeting the 3% plus open pittable scenario, we are hitting numbers like 6 metres at 11%, 8 metres at 14% in those high grade feeders. So what that suggests to us is below these resources, there is the potential for high-grade underground resources, which we haven't even tested yet. When you look at this pit-constrained resource, it'll be quite obvious to you, or maybe it's not, but the feeder zones is where the mineralisation is constrained. So it's constrained to the Callatan into the Chickaman feeder zone. You'll also see that there's actually a shallow component to the higher grade, so if we wanted to get into an early stage high-grade mining scenario, there is that possibility. That resource is only constrained to the drilling we've done to date. It's open in all directions. This is the Tonka and Navajo resources, about 8 kilometres to the southeast. You'll see that the focus of the drilling here has been on the Colorado and the magazine feeder zones. Outside of those feeder zones, there's been very limited drilling. So we think with infill drilling and regional drilling, there's exceptional potential to grow those resources. And once again, we're hitting 3 metres at 20%, 5 metres at 14% within those feeder zones. So whilst you're looking at this as a 11 kilometre long mineralised zone, there is that potential for high grade underground below these resources. And once again, this is just a bit of a schematic of those constrained pits. That takes in the Colorado and the magazine feeder zone. So whilst there is mineralisation outside of those, the pits, only the constrained elements will be within those resources. This is just I guess a bit of a schematic of what it looks like. The mineralisation starts about 40 metres and gently dips to the east by about 5 degrees. So we believe that the whole 45 kilometres could host this style of mineralisation, and what we've got to actually focus on is the high grade feeders. And if you look at the open pittable scenario here, the areas of where the feeders are is where the pits are constrained. Now, There's an iron oxide sequence above the mineralisation, which is extremely soft. So it actually has the potential for a low-cost waste removal scenario as well. And below those deposits, there is that potential for high-grade MVTs. What's important is when you make a discovery, you want to make sure that the metallurgy stands up. And we had some excellent results at the back end of last year. We had high zinc recoveries to 90% and cleaner concentrates. It's a very coarse grind to 150 micron. It's fast flotation with clean sulfide, and we're fortunate enough to use site water. It's a simple and conventional process flow sheet that gives us the chance for low capex OPEX operation. We're getting zinc concentrate grades to 59%, which at the higher end of global benchmarks. There's no penalty elements within the metallurgy as well, which is a massive bonus for the project. But there's obviously considerable potential to elevate the metallurgical scenarios through optimization and beneficiation as well. Now, this is like a value add for the project, this DMS and ore sorting. So whilst we believe the 3% goes straight through the flotation, there is that potential for a big, larger volume of mineralisation that sits within the 1.5 to 3% range that we could DMS and ore sort. And that's simply just a very cost-effective and simple way of selecting the waste from the ore. And DMS particularly works well with this style of MVT mineralisation. There's a few examples there where you're getting 4 times upgrade in head grade, 8 times upgrade in head grade. So example, if you had a 1% ore body, you could elevate that to 4%. But what's great about it too is you can actually remove 80% of the waste, which significantly lowers your capex in the future. Now, tip of the iceberg. So we've done over 100,000 metres of drilling. There hasn't been a magic formula to find these feeders, but we're getting a much better understanding of how to target those and what's controlling the higher grade. So the mineralisation passes up through multiple geological formations through 4 and 5. We've been targeting number 1, which is the Navajo unconformity. When you get mineralisation near those feeders, you're getting much higher grades and much bigger widths. And as it gets further away, it decreases. But because there's a whole series of feeders, they join up like a coal seam, hence why we get this big mineralisation envelope. Obviously, the focus for us is to find those feeders, and we think we're getting a better understanding, and I'll touch on that later. But what's exciting is target 4, which is 2 layers below, a group called Strickland drilled into that structure and hit high-grade mineralisation. So whilst we've got 45 Ks of the unconformity, we've also got that high-grade underground scenario too, which is already being tested by another group called Strickland. So it's very exciting. So this here just gives you the snapshot of the tier scale potential of the project. You'll see that there's the Chinook deposit, the Tonka and Navajo. That only makes up literally 25% of our Navajo unconformity horizon. There's no reason that doesn't continue on all the way through. They are open in all directions. We've got 9 kilometres along the Navajo southeast trend, which we've just generated some significant targets which haven't been tested yet. And we've got another 12 kilometres along the Sweetwater trend, which remains untested. And you've got to imagine too, below those 45 Ks, there are the high-grade underground feeder targets as well. So we literally are at the tip of the iceberg of what this could be. Now, as I said before, there hasn't been a magic formula to understand how to target the mineralisation, but what we found recently is if you soil sample above the known deposits, there isn't a signature, but where they daylight out to the west, it does show some tenor of mineralisation. And that tenor of mineralisation generally says there is going to be mineralisation at depth. So you'll see where the deposits are, there is some mineralisation out to the west. We've just soil sampled all the way along the Navajo southeast trend and found over 9 kilometres of soils, which are similar, if not better, than what we found at the deposits. So that suggests the mineralisation does continue on. We've also recently flown airborne gravity, and that airborne gravity has showcased that the gravity lows are showcasing where those feeder zones are, and you'll see that where the Colorado and the magazines are. So we've actually flown the airborne gravity along that Navajo southeast trend, and we've actually found another 9 potential feeder targets which haven't been tested to date. We've just had that heritage approved, so we think we've now got a template where we could target these feeders all through the project, and we're going to test that theory very soon. Zinc's role in a low carbon economy. As I said before, there's never been a better time to find zinc. It's critical mineral for the renewable energy storage. In particular, it's a big scenario with offshore wind turbines and zinc coating for your solar panels. And we think in the future it will be part of your batteries, but right now it's about renewable energy. So if you start to look at the production and future supply deficit, they're at significant historic lows. 4 of the 10 major mines are running out of ore in the next 10 years. And if you look at the charts from Wood Mackenzie, by 2040, there's a significant gap looming. And if you start putting together the South 32 climate change scenario, it doubles once again. So what that says to us is that there is a requirement for new mines and new discoveries. So what's going to fill that gap? We believe, and we know, that Irahidi is one of the largest undeveloped zinc deposits globally. Now, 92% of deposits are mined underground with significant higher mining costs. Ours is an open pit scenario. We believe we could significantly grow that to, our target's to sort of 200 to 300 million tonnes from where we are now, which will also mean that the high grade lower tonnage will grow as well. There is no reason why we can't find high grade underground as we progress the project in the near future, and that's something we'll focus on. But just to give you an idea of what something like this is worth, it's very hard to find zinc deposits. The Hermosa discovery was bought by South 32 4 years ago, 120 million tonne zinc deposit for 2 billion cash. We're currently sitting at 140 mil market cap. So you can see why we're excited about how we can grow our market cap and share price from where we are today. Sustainability is a big part of what we do. We know it's important. We're engaging with our stakeholders, whether it being the Shire, station owners, but in particular the Native Title Group. We're looking to grow a really strong relationship and be collaborators with the Tenpac people. So near-term catalysts at Irahidi. We, as I mentioned, we've got a big drill program about to commence. We've recently had the Navajo Southeast trend cleared. We're going to go and test those series of those high-grade feeders. We've also got another 12 kilometres along the Sweetwater trend, which remains untested, and we hope to put out some targeting numbers there as well. We're going to grow and expand on known resources at Chinook, Tonka and Navajo. And as I said, we believe we could get that to potentially supergiant in the future. We're also going to do some sonic drilling, which will enable us to do beneficiation testing to look at that DMS and ore sorting scenario. It also enables us to start looking to get towards that indicated resource level at this point in time. We're also going to start commencing our scoping studies at the end of 2023 to start wrapping some numbers around there. But all in all, very exciting time for shareholders, very exciting time for any new investors to get some zinc exposure, and a lot of catalysts to come throughout the course of 2023. So once again, thank you very much for taking the time today.
Shane, where does the name Irahidi actually come from? I'm assuming it's a station, but does it have anything else behind it?
I wish I knew. No, I think it is a station, to be honest. So
it's an interesting name.
Well,
isn't
actually,
it?
the Irahidi Basin is probably why it's named that. It's a big basin where we were targeting earlier on.
But you still wonder where that name comes from, don't you? Who thought of that as a name? You wish I'd asked you a more insightful question that you could answer, but there you go.
Thanks.
Good
Next
on
time,
you, mate.
we'll do it again.
We'll go over and have
Thank
a
you
drink
for
with
that.
you later on today. It is interesting when you see some of the names of the projects, etc., and some of them have a very clear outline, perhaps owners, etc., like horses or rivers or whatever it might be, but that was an interesting one. Right. You ready for the next, what have we got? 4 to go, don't we? 4 to go. And we'll also do the results in a moment too from that poll. So if you haven't answered them, can you just log into the phone and have a look at those and just enter your thoughts and your opinions? Where is Rob Bills? You down the corner there, sir? Come on up and join us, Rob. We're going to welcome Emerson Resources Managing Director Rob Bills to the stage. Emerson Resources is leading the way utilising cutting-edge technology across the Tennant Creek mineral field in the Northern Territory and also in the New South Wales Macquarie Arc to identify gold and copper deposits. It's got some exciting discoveries which were identified back in 2022, and there's a very exciting pipeline of activity as a result now in 2023. So let's make him welcome as he outlines it to us.
Oh, thank you. Good afternoon. Thanks, Chrissy, for that intro, and to RIU for the opportunity to provide an update on Emerson. Yeah, Emerson loves copper and gold. We believe, it's got very strong fundamentals going forward. So both of our projects in New South Wales and Tennant Creek are copper gold projects. This slide is recent drilling, which we've just finished at Keola project in the Lachlan Fold Belt of New South Wales, looking for porphyry copper gold. I guess there's a couple of things I've learned over my long time as a geologist is that when the driller calls up and complains about difficult drilling and ground position and ground conditions, it's likely that you're probably in the ore zone. And then if he calls up a couple of days later and says, "Well, sorry, mate, but we've shanked the bit and the rods are down the bottom of the hole," you are in the ore zone and you're probably in the higher grade ore zone. So fingers crossed on this project at Keola. We certainly did that, and we have to wait for the assay results. On a more serious note, I'd just like to really dedicate this talk to the late RP. Look, he was a very strong advocate of the mine industry in Tennant Creek, and particularly Emerson Resources. We struck the first joint venture with Indigenous peoples in Tennant Creek, and RP certainly drove that. So it's a very sad occasion, you know, that he's passed. So just as a snapshot of Emerson, we've got, as I said, commanding land position in Northern Territory, New South Wales. We've got a track record of discoveries. We'll talk about a couple of these. The Hermitage discovery in Tennant Creek, a little bit about our Golden 40 project, gold project, and then obviously Keola. The distinguishing feature of Emerson really is that we're creating an emerging gold royalty business. So we've got no plans to take these discoveries into production. We've got a joint venture partner that does the JORC resources, the mining and processing, and we take a 6% gold production royalty. You would have seen some corporate wrecks, I guess, for want of a better word, where companies have gone from exploration discovery into mining. We aren't doing that. We believe there's a much better path, and that's a much lower risk path by just taking a 6% gold production royalty. We've got an aggressive program this year, so we've got stage 3 drilling at Hermitage. We've got drilling across our joint venture projects. Also Keola phase 3, which I said we've just finished, and we're waiting for the assay results. So let's dive into New South Wales first. So we're in this very prolific copper gold belt here. We've got Orange here, obviously, Cadia Ridgeway, the Newcrest project sitting down in here, our tenements down in here, and we've also got some tenements up here at Wellington and also over here. This is the 3D model that we came up with last year. It's a geophysical model, as you saw from that first slide. There's not much outcrop, so we relied heavily on this 3D. It's a geophysical MIMDAS model, so it's got a centre here, which we call the Dolly's Prospect, mantled by this high chargeable conductive zone around here, and our first 4 drill holes. This is the first deep drilling in this project, and we've just finished it. Probably the most interesting hole, I've just come back from Orange, so I've been looking at these holes, and this is hole number 8. We intersected probably about 100 metres roughly of mineralisation in 2 skarns. The top about 70 metres thick. You can see what we got there, so that's a typical skarn. This is chalcopyrite in the skarn, and then the lower zone, a magnetite, pyroxene, magnetite pyroxene chlorite skarn. That's also chalcopyrite. So skarns are a very common feature of big porphyry districts. Cadia Ridgeway, their first discovery was a skarn system, and at Cadia Ridgeway there's 5 separate deposits there. So we're looking at a cluster of deposits. We're not just looking at one. Now turning to the Northern Territory, Tennant Creek. Our project's right in the township of Tennant Creek. That's where our tenements are. We've got, probably one of the most prominent strategic land holdings in Tennant Creek, some 1,700 odd square k's, right in the middle of the field. Just zooming in now, the yellow and blue are joint venture areas. The red up here, that's our Hermitage discovery in our 100% ground. We've converted quite a few of these discoveries into JORC mineral resources. Our joint venture partner are putting in a mill, a CIL mill in here. So as we stand today, these are, these projects are stranded assets. There's no way to monetize them. So once that mill goes in there, obviously, that unlocks these projects for processing our 6% gold production royalty. Just talking about the discoveries again, this is another project where very difficult ground positions and shanked a bit. Our discovery at Hermitage, which we announced in 2021, it was ranked as one of the highest grade gold copper intersections. So, and when we shanked the bit, we had to abandon, when we got the assays back, we abandoned in 20 grams per tonne gold and 3.9% copper. We went back and March 2022, we announced this intersection. Sorry, this was the discovery. This was the discovery drill hole, 116 metres at 3.4. We went back and did a angle drill hole, a diamond drill hole, and that got 9.4 metres at 2.7% copper, 5.6 grams gold. So that's this hole here. So this is a plan view. This is the drill chips from the discovery hole. So we had a thick zone of malachite in the oxide zone. Then we went into native copper, then down into the sulfide chalcopyrite zone. The blue is the outline of the host magnetite hematite body. Obviously the drill traces open along strike. The red is the magnetic anomaly. So we went back in August 2022 with an angle diamond drill hole, first diamond drill hole in this deposit, a scissor hole, and again, absolute cracker. Similar mineralogy, went through a malachite zone and then down into the chalcopyrite sulfide zone, and very, very high grade gold. So the high grade gold sitting beneath the copper, 4.8 metres at 19% copper, 214 grams gold. So that's a absolutely amazing, intercept, incredibly high grade. Unfortunately, as we went down that hole, it got cut off by a late fault that cuts the mineralisation. So the task for our next phase of drilling is to drill beneath that fault and locate the rest of the ore body. This is what it looks like in long section. So you can see the blue, that's the host magnetite. Obviously the red is where the drill holes intersect that, open along strike. This is the flat fault that cuts off the body. So we do believe that this continues on down plunge, and obviously the subject of our drilling later this year. So Tennant Creek is a highest grade gold mine, highest grade gold province in Australia. They're very high value deposits. They're relatively small footprint. So surface area of the biggest one, Warrego, as you can see, is 200 odd metres. So that's a pretty small exploration target. The tonnes come from the down plunge extent, okay? But they're very, very high grade and very high value. So they're tough. They're tough to find in exploration, but we believe we've pioneered the approach and tools to discover them. And the big breakthrough has been Halitem. Previously, the field, obviously the host is magnetite, so it's magnetic. They used fixed wing, which was flown on sort of 50 metre centres and 50 metres off the ground. We're flying the drone at 15 metres off the ground on 15 metre spaced line. So the resolution of this data is far better and has enabled us to vector in on these high grade magnetite hematite bodies, which is the host to the high grade gold and copper. Just an example of Golden 40. This is the old Golden 40 mine. The headline drill hole there was 28 metres at 28 grams. Again, a good reflection of the sort of grades you expect in Tennant Creek. The grey is the wireframe. So this is the old mine, but we've found extensive extensions to that mineralisation to the north. We call it Golden 40 North. And again, the drone, the resolution of the drone was, assisted us in actually sighting those drill holes. We've also announced late last year this Golden 40 East, some pretty good gold and base metals down there, and this area is open as well. So this is the drone mag anomaly, which I think has got a lot more potential to add to the resource there. Just a little corporate snapshot. You know, we're well funded. We obviously don't have to put our hand in our pocket for any drilling on the joint venture area. Our joint venture partners earning in. We're the managers and operators. Once we make discoveries, they flip into what we call the mining joint venture, where they do all the JORC resource mining processing. We get a 6% gold production royalty. So our burn rate is actually quite low. Obviously, when we're drilling on our 100% projects, we use the cash. This is just a little graph of our gold royalty. So a 6% gold production royalty in the grand scheme of global royalties is a very, very high royalty. So it's a great royalty to have. A little bit about our board of directors. Andrew, our chairman, myself, Alan and Alan, all ex-Western Mining Mafia. So all from Western Mining. So just some catalysts to finish off for 2023. You know, we're unlocking these stranded assets in Tennant Creek. We've got multiple drill programs. We're free carried with this 6% royalty on production, so we don't carry any of the risk of going into production. Our joint venture partner does all that. We just get a 6% production royalty. So this emerging royalty business, gold royalty business is they're not big businesses in Australia, but over in North America, they are huge. And they're considered low risk. So pension funds and all sorts of funds invest in royalty companies simply because they are a lot lower risk. We're well funded. We've got strong shareholder support and very experienced board and management. So I'd just like to end this, you know, in terms of RP, you know, rest in peace, RP, because you know, you're an absolute champion of the you know, the resource business. He was a strong advocate for mining. He could see that the way forward for his people in Tennant Creek was to actually be an active participant in it. And he drove, you know, a lot of the communication and engagement with Emerson in the Tennant Creek mineral field. So I'd like to leave it there. Thank you very much.
JP, thanks, Rob. Thank you for sharing that. Right, Jeffrey Sweet is next up on stage today. Where do you sit in, Jeffrey? Up the back. Right, while you're walking that long, long walk, I'll tell everyone a little bit about you. He's a CEO and Managing Director of Industrial Minerals, and he's going to join us and talk about the company's portfolio of projects that they hold throughout Western Australia, and they focus on mineral sands. Now, we've heard about the rising demand for high purity silica sands and quartz for applications in green tech, including solar PV manufacture. This lot, you're developers with low-cost, low-impact mining model to meet that rising demand. And for the next 15 minutes, he's going to encourage us and tell us ways that they're going to do it and why we should come on board. Would you please make him very welcome?
Thank you very much. Good afternoon. Appreciate the opportunity to introduce and present Industrial Minerals Ltd. So Industrial Minerals was, or IND was, is an ASX listed company that was listed in July of 2021. We have a strong board with plenty of experience in the industry, as well as a market cap currently sitting around the 25 million mark. Our share price since listing has been reasonably steady, sitting in the sort of mid 30-cent range, and is well supported by both the our top shareholders as well as the interest within the board as well. As mentioned, our primary focus is definitely silica sand, and look, silica sand's has some amount of interest in understanding in the greater market, and I guess there's plenty of uses for it, ranging from low value construction material through to higher value going into the electronics and higher value solar panel market, for example. So China's definitely one of the largest consumers of silica sand in the current state. And it's one of our primary markets that we were invested in. high purity silica sand has plenty of uses, ranging from the lower value ones, as I said, bottle glass, float glass, foundry, through to high-end electronics and in between as well. So our primary aim is to focus on the glass market for the solar panel production, where the quality requirements are reasonably high, and then as such justify a reasonable value for the product as well. Demand across the whole product stream for solar panels is not only in the glass but also the silicon metal as well. So while our primary focus at this early stage in the company's life cycle has been the high purity silica sand, we've also taken interest in high purity quartz with the intention of producing a value added product for both the silicon metal production stream and also into the likes of the silicon chips, solar cell chips and cells, and the crucibles that are used for the production stream as well. Now, the silica sand across Western Australia is, while it's seen to be a rare and endangered species, there is quite a vast amount of it out there. But there's some key requirements to actually getting access to it. So as we listed, we came online with a number of projects and tenements that were very prospective for high quality sands, and we quickly learnt that while the quality may be suitable, gaining access to the resource is pretty key as well. So with the environmental requirements being a pretty large part of that factor, so within a short period of time we realised the key drivers that we're going to have to chase, obviously one being the quality, and that's, as I say, there is various decent quality deposits out there. Number two being getting access to the land. So rather than deal with heavily native vegetated areas, we pivoted to the private landholders with the intention of working on land that's been previously cleared, so generally the farming land, and that was a benefit in terms of reducing some of those environmental challenges, and as a flow-on effect of that, the extraction process was also somewhat heavily simplified in that clearing of vegetation, clearing of overburden was reduced as well. And I guess putting those two together, the third part of the advantage, I guess, is working on a low capex, low opex model. So targeting areas that are close to port, obviously with transport being one of our largest costs. So high quality, close to port, and access to the land, good relationships with the landholders. As we've developed our projects, I guess it's at the early stages, trying to deal with offtake has been a chicken and egg thing, but everyone said go away and come back when you got a mine ready. I guess in recent times we've probably been a lot more well advanced, as I'll speak on in a minute, but it's coming around full circle. So we've got offtake potential buyers coming to us now, and we've had very positive sort of discussions with quite a number of groups, including a recent trip to China, dealing with potential buyers as well as offtake partners who will work in conjunction with our mining operations. So our primary project is the Stockyard project, which is located south of the Port of Geraldton. It's a group of properties that are that have quite a vast amount of silica sand essentially sitting within cleared paddocks in farmers' backyards, and there's no native vegetation. The sand's sitting on the surface, and it was quite an easy, exploration process in terms of sampling. So the majority of it was done by hand auger, and was able to be fairly rapidly progressed. So in the short period of time, we've managed to get the mining lease approved. Heritage surveys have been completed with no issues. We have full water licence to commence mining. Clearing permits have been approved. Mining proposal, mine closure plans all approved. We're essentially ready to start mining. We're well supported by the landowners, and they see the benefit obviously in getting some off-farm revenue for their properties, as well as the fact that when we clear the sand off, they're actually having, they end up with a better soil profile, which will be a value add for their property in the long run as well. So to date, we've got a 9.6 million tonne JORC compliant resource, which is in its raw state. We'll be looking at doing a simple wash and desliming beneficiation on site, which will make it suitable for as a DSO product into the buyer's market. While we've only got below 10 million tonne on the initial resource, we don't see that as being an issue, in the fact that the intention is to ramp up to a million tonne per annum production rate, and once we have got the offtake agreements in place, the intention would be to go out and build on that resource. So rather than spend time continuing to build a million tonne resource now, we see getting into production as a pretty critical phase. To date, we've done internal feasibility studies to justify continuing on with the development of the project, and we have not at this point released any pre-feasibility studies or DFS studies, as we really need that offtake sales agreement in place to justify the project, and we don't believe that will be too far off. Late last year, we did sign up our first MOU with a potential buyer, and they're currently doing some test work on our material, and we're hoping to see back some results sometime in the near future, with the intention of then progressing to offtake agreement. And as I mentioned before, the level of interest from other parties has been substantial, so I don't think it will take too long to be able to build up that full production capacity. So, as I said, it's been a fairly quick process getting to the stage we're at now. Really, the last stages to tick us off into production really is the offtake agreement, and that will be essentially followed straight behind with the final feasibility study. And assuming things go well, we'd be like to think we can have a decision to mine and be heading towards moving into production later in this year and into the next year. This is just a visual to give you an idea of the simplicity of the process. It's almost a sandpit or a quarry in someone's backyard. So as I say, the sampling process was very simple and straightforward. Essentially, it would be a minimal amount of clearing of grass off the top of the paddock, and then essentially a conventional excavator dump truck type operation feeding the ROM, processing, wet screen, and cyclone desliming to take out the majority of the impurities that sit in the top and bottom end of the product. from their DSO shipment over to the end offtake partner, where they'll do further processing to do the final beneficiation and into the final buyer's market. And just to, I guess, elaborate on the impurities, the silica sand, silica content is one factor, but the impurities are extremely low, with the iron target being around the 100 ppm mark. So we're quite cognizant of the ability to contaminate during shipping and other processes. So the dealing with an offtake partner is quite important to do that final beneficiation prior to getting it to the end customer. As well as stockyard, we have a very large foothold across southern Western Australia and close to key ports. So we'll be backing stockyard up with further opportunities, including down south around Esperance Port and Albany Port. And we also have other strategic minerals in the close to the construction hubs of the northwest, and including high purity quartz, which is another critical mineral feedstock in high demand. That should do it, I guess. I've heard the bell, so thank you very much for your time, and I hope it's been somewhat informative.
Good man, thank you.
Thank you.
You're coming up for drinks after?
Sure.
Excellent, I know. You've been very quiet and reserved when you're on stage, and he's not usually that quiet and reserved. So go and rib him up and get him energised and have a chat with him about the project, because it has really good potential. Go on, get out there, enjoy. Thank you. Would you put your hands together for him again? I need to move a little bit, so I'm going to ask you to just join me. Can you just stand up for 2 seconds? And I know this is slightly puerile and maybe grade 3, but just stand up for 2 seconds and have a bit of a stretch, because I certainly need it. Look at that fellow there. Look, he's looking at the ceiling. Can you catch? Whoa, no. Oh, only if I throw it far enough. Is that a desperation hit in the middle there? I can't get it that far. Look at you. No, I see. I have 3 brothers and they've all tried to teach me to throw. I actually have a complete tear in my right rotator cuff, in all honesty, because anyway, that's a story for another day and outside with drinks. Sit back down. While you're doing that, guys, is there any chance of you popping up that slide for me, or would that be a physical impossibility? If no, just you can stay standing while we're doing this if you want. We've got 2 minutes up our sleeve. You know the quiz, the little poll that we're getting you to do? That's up there, all right, yeah. I just thought I'd go through some of those with you while we're having a bit of a stretch. So if you're wondering if I'm sitting on my social media, etc. on the phone, I'm not. I can't actually get it to work on my computer at the moment, which makes it a little bit problematical, but I don't want you to think that I'm doing anything but work while I'm sitting here. So we've got the poll results from today. So the first question was, what percentage of the world's energy is currently derived from renewable resources or renewable sources? The popular vote was 2 to 5%, which is not a lot. Euros Hartley's correct answer was the 5 to 10% range. Note, it's not just power generation, it includes transport, ex-nuclear and hydro. Number 2, what will be the gold price, that's US dollar terms, by the end of 2023? And the answer to that one, we all said between US 2000 and 22. And the last poll of the day was, what will be the best performing commodity over the next 12 months? And gold has absolutely rocketed in, followed by copper and lithium. So they are the results from our poll for day 1. Do you want to sit down now? You can stand at the side of the room if you like and do little leg exercises, and none of us will think anything the worse of you. Stu, if you're watching this at home, please, for goodness sakes, do not look at us askance. All right, 3 to go, and then we're going outside and we're going to have... You don't actually have to drink alcohol. You're actually allowed to drink water or have a cup of tea and still chat with us. So please, just because ABC Refinery is rolling out the red carpet, that doesn't mean you have to actually drink alcohol. Right, those of you who are regulars at our events will recognise this fellow as he strides with purpose up onto the stage. You'll recognise him from his role as the founder of Genex Power, which is an ASX-listed renewable energy company with more than $1 billion worth of assets in operation and development. Today, Simon Kidston has joined us in his new role for 2023 non-executive director of Lithium Plus Minerals. And as the name suggests, the focus is lithium, and they believe that they're in a really strong position to cash in on the right commodity at the right time. And why would we jump on board with them? Let's make Simon very welcome.
Thank you very much, Chrissy. Look, I'm really excited to be here today because we've just announced the commencement of our 2023 drilling campaign. It's going to be super active. We've had a very, very wet season up in Darwin, and we're now ready to get on the ground and drill continuously for the entire calendar year. So we're planning 18,000 metres, and we're going to drill into multiple prospects. So we look forward to updating the market as we hit those results. So in terms of Lithium Plus, it's high impact lithium exploration. We've been lucky to secure a strategic land package in what I believe is one of the hottest lithium fields in the country. The tenement package was acquired back in 2018, and that's important because it was before the lithium land rush. So we've got the right tenements in the right lithium province. It's a total of 1,700 kilometres, so it's truly strategic. And importantly, it's adjacent to a company called Core Lithium, which has just recently commenced mining at its mine just outside of Darwin. At the time our founder, Dr. Ben Guo, acquired these tenements, Core had a market cap of $20 million and was unknown in the capital markets. Fast forward 3 years, today they're capped at $1.8 billion, and we surround their mining license with what I think is very similar geology. So very, very exciting time to be involved in this company. In terms of the corporate snapshot, one of the key features here is a very tight share structure. More than 43% of the shares in issue are escrowed for a further 12 months. We've also got a very significant cornerstone shareholder. CATL of China is the world's biggest battery manufacturer. They're the biggest by a country mile. I think they control a third of the lithium battery market in the world. They've chosen to partner with us. We know they're hungry for lithium, and today they hold 9% of the company. We've got a modest market cap, sub $30 million. We've got $5 million of cash, and we're drilling aggressively from this week, continuously all calendar year. And we all know as investors, good news flow drives share price performance. In many ways, it's all about location. Location is the key to unlock value. I was reminded of this recently when about 2 weeks ago, there was news out of Chile in South America about attempts by the government there to nationalise lithium deposits. So I'm very pleased to be focused on the Australian market in what I think is one of the premier lithium provinces in the country. The great thing about the Bino lithium field is it's less than 45 kilometres from the port of Darwin. Now that's important because there's infrastructure all around us. We've got roads, we've got power, we've got workers' accommodation, and of course the all-important port less than 50 k's away. And we all know that infrastructure and proximity to it drives low-cost mine development. If we look at this map here in front of you, our tenements, Lithium Plus, is depicted here in brown and red, and our neighbour, Core Lithium, their mining licence is depicted in blue. So you can see our tenement package surrounds on 3 sides the mine that now is operated by Core Lithium. So it's a great location, and we're really, really excited by the drilling prospectivity of these tenements. Just a few words on this lithium field. It's well known, and the reason why it's well known is that they've been mining here for almost 100 years. Initially, they were chasing tin and tantalum, and of course now everyone's focused on lithium. I don't normally focus too much on neurology, but in this case, I think we can draw some conclusions by the geology of our neighbour and what we've observed on our tenement package. And there's one stat in particular from Core's public announcements which sticks and resonates in my mind, and that is that when they identify a pegmatite, 1 out of 2 or 50% of the time, it's a mineralized pegmatite. So that's a very, very interesting statistic for us. We believe we've got 30 odd prospects, and if we can convert a good portion of those, we'll have a very significant and potentially very valuable business. In terms of core lithium, to date, they've defined just over 30 million tonnes at 1.3%. And we believe we're following their footsteps. We're essentially 3 to 4 years behind the path they've trodden, and we're looking forward to catching up as quickly as we can. So in terms of cracking the geological model, when we started, we had one drill hole on our tenements that was drilled by the vendor. So we figured last year that would be an important place or a smart place to focus on for our maiden drilling campaign. And that's exactly what we did. We drilled around that known intercept of lithium, and we've had phenomenal success. We've drilled along strike, we've drilled down dip, and we've found thick, juicy intercepts of mineralized pegmatite, grading sort of 1.4, 1.5, 1.6%. They're good grades. We've had success, I guess, at our first prospect, and we're looking forward to aggressively doing infill drilling at this location to hopefully define a maiden JORC resource of this deposit by the end of this calendar year. So this year on this deposit, it's about infill drilling to determine a JORC resource. In terms of some of the other work we did last year, we did a very systematic and large-scale program of soil geochemistry work. Essentially, we sampled more than 4,000 samples on a grid-like basis throughout our tenement package. And we've now calibrated that information with the historic mining activity, the trenching, the other work that's been done, and we've now defined these 30 high value, or we hope high value prospects, certainly high priority prospects, which we intend to drill out. So bearing in mind the core lithium success rate of 50%, we're hopeful we can follow up in their footsteps on that metric as well. This is a zoom in on one of our key areas of interest. We call it King's Landing, and here we've identified some very large pegmatites that come to surface. And these are genuinely very large. So in the case of Jewelers, we're looking at a system which is more than 500 metres long. Another one, Perseverance, is at least 100 metres, and Jenny's nearby is 250 metres of surface expression. So they're large surface expressions, and to put that into context, the biggest surface expression at Core when they were doing their lithium exploration was around 200 to 300 metres. So these have the potential to be very, very large. It comes to surface, and we're going to drill it aggressively, this current field system. So these are obviously high priority targets, but there's one in particular I'm super excited about, and that's the one called Perseverance. And the reason why I'm excited about that one is that we drilled it very late last year, just as the wet season was approaching, and we managed to drill 8 holes, which confirmed that that particular pegmatite is mineralized. So it's this little one here, and we're going to be drilling this one over coming months, and I think that is certainly a prospect to watch. We're very, very excited by that one. This is a bit of a zoom in of that same area, overlaying the soil chemistry and samples we took over last year. And you can also see there's a number of structural controls here. And that's important because our neighbour Core, their mine, is just here. So it's less than 1 kilometre from the edge of the mine to our properties, and we're along the same fault structure which controls the pegmatite dikes. So we're encouraged by a number of different metrics that have suggested quite keenly we drill there this calendar year. This is a little cross-section of our first discovery at Ley. I guess here we've got high-grade, thick, juicy intercepts of lithium pegmatites. Just calling out some numbers to give you some context. 28 metres at 1.6, 21 metres at 1.7. So these are good grades, good thicknesses, and the grade seems to improve at depth. So this is the one we're doing infill drilling on this season, and this is the one where we aim to have a maiden JORC resource by the end of this calendar year. This is a plan view of the same discovery at Ley. And what we find here is the more we drill, the more we find. And in stepping back to drill deeper at this late prospect late last year, we actually intersected a further parallel mineralized pegmatite 160 meters to the east. So we'll drill that one out again this year as well, and hopefully we'll discover a parallel lode adjacent to the discovery we made last year. So very, very exciting to follow up on this area, and I believe the drill rig will be drilling there from this weekend. So I guess if I focus this to our program for this calendar year, it's going to be super active. We've got our drill rig mobilising right now. It's 18,000 metres combined RC diamond and RAB drilling. So in summary, lay is infill, defining that known deposit. Perseverance is drilling out the success we had last year, where we confirmed that particular occurrence is mineralised, plus testing a number of the other prospects, which we hope will also follow similar success. So this King's Landing area in particular will be a major focus of the business, and we hope to have some interesting results over coming weeks and months. In terms of pulling it all together, our core corporate objective this calendar year is to define at least one maiden JORC resource, hopefully more than one, but at least one. And I think that's an important stake in the ground for the business as it then moves into the development phase. So all of our exploration activities this year have been calibrated to achieve that objective of a JORC resource by Q4 this calendar year, 2023. Just a few words on our 9% strategic shareholder, CATL. They're a great partner to have. As I mentioned at the start, they're hungry for lithium. They're the biggest battery manufacturer globally. A little fun fact is that they supply all the lithium cells for Tesla. People think of Tesla as a major player in the lithium market, and they are, but all of the lithium batteries come from CATL. So the global leader, they've chosen to partner with us, and we see them as an avenue to commercialise this deposit in the form of offtake. We're very fortunate that our chairman, Dr. Ben Guo, has a long-standing relationship with their chairman, and I think it bodes well to have that chairman-to-chairman negotiations to deliver an outcome which will hopefully involve funding of our deposits into mines. In terms of our team, there's two key people I wish to highlight here. Firstly, our chairman, Dr. Ben Guo. I think many regard him as a guru in the lithium industry. He's been around for a long time. He's identified a lot of deposits, but in that time, he's worked very closely with Dr. Bryce Healy. Bryce is our exploration manager, absolutely fantastic track record, and is leading our team and delivering phenomenal results. So the two of those individuals run our technical team, and great things are going to come out of that partnership over coming years. I won't dwell too much on the commodity. Obviously, the commodity price is beyond our control, but I think the observation here is that there was a correction in the lithium commodity price late last year. The indications we're seeing in recent weeks is that the price is stabilising. A number of brokers are now calling that, and I'm tending to believe that, and the feedback we're having from our partner up in China is that that's what they're observing on the ground as well. So if that is true, and time will tell, now's obviously a great time to increase exposure to anyone exploring in the lithium space. So I guess key highlights, there's really only 5 things you need to know or remember about Lithium Plus. Firstly, location is key. We're 45 kilometres from the Port of Darwin. We've got phenomenal infrastructure, and that leads to low-cost mining. We've got phenomenal geological prospectivity right next to the newest lithium mine in the country, and the company core is drilling right up to our boundary. We're going to have an aggressive drilling campaign, which means lots of news flow all year. We've got a phenomenal relationship with the biggest battery manufacturer in the world, and I like to think that the board and management team have got a track record of delivering for shareholders. So thank you very much.
Thank you. He looks energised, doesn't he, by this new role? Yeah, it suits you. Well done. Let's hope it suits our investment portfolio. That would be very handy. We have one more investment opportunity for you to listen to. Steve Norgard is going to come up and join us on stage to talk about Widgie nickel. While he's doing that, just you will notice if you look towards the back of the room that we have put I probably can't because you're seated, but there's a strategically placed bollard. So we see the little green man escaping from the room. To the left of that, there's actually a bollard. It would be to your best advantage and our advantage to actually enjoy drinks, to actually leave through the 3 doors on the right-hand side. And if you do that, you won't destroy the bar that's been set up outside by ABC Refinery. So please leave through the 3 doors on the right-hand side. If not, I will have you up here on stage with me tomorrow and you can explain to everyone why you didn't follow instructions today. Is that fair? I'm mean, aren't I, in the last part? Right, Steve Norgard, how are you going, sir? Good. You're a lot taller than I remember you from last time.
Oh, I've grown.
There you go. It's actually a true thing. All right, so you're very focused on creating value from your Mount Edwards project. Would you like me to sit down? You can take your whole 15 minutes.
There you go.
Excellent. Oh, okay, you would. All right, wait. Nickel endowment. You do have an additional avenue for value creation because you've got that little lithium has come into the back pocket there. Correct. So tell us about it, convince us to get on board. Would you please make him very welcome, everyone?
Thank you very much, ladies and gentlemen. Hopefully I won't bore you too long. Widgie Nickel's been a recent aspirant in joining the ASX only 18 months ago. We raised $24 million when we listed. We were spun out of Neo Metals. A significant portion of that money's been now spent in drilling on our project area, the Mount Edwards Nickel project, which I'll tell you a little bit about, the usual disclaimer. That money's been well invested. We've achieved a lot with it over the course of the last 18 months. One of our stated goals when we listed was to be production ready by the end of 2023, and our Armstrong project, we've advanced that through a process of feasibility which is nearing the end point now, and it is conceivable that we'll be mining at Armstrong before the end of the year. The Mount Edwards project does have a significant production history associated with it, so it bodes well for the future. The Armstrong project's only a 12,000 nickel tonne resource, so it's relatively modest. However, further investment over the course of the last 18 months has seen our Widgie South area now rapidly advancing in terms of our level of geological confidence, which has now got us to the point where we can subject that project area to a scoping study, which we're hopeful we'll see happen in the not too far distant future. That's a much larger resource base of in excess of 70,000 tonnes of nickel. So we're putting together a long production profile ahead of us. It's not all been just about infill drilling and increasing levels of geological confidence. We've had great exploration success, and I'll tell you a little bit more about that. Indeed, some of the resources we've got there are a long way away from being finite. One of the significant things with our project area is our resource base. Whilst it's primarily focused on nickel, the byproduct endowment isn't really known about because in our geological data set, it's dominated by many assays which are limited to just nickel. So through this massive investment in exploration drilling, we're populating that data set, and now we can really ascribe some value to that. It's also, in very recent times, as recent as midway through last year, it came to rise that we did have an element of lithium that we needed to follow up on that, and we've made rapid progress, which I'll update you on during the course of this presentation. If you're ever going to start a mining project, where Mount Edwards is tailor-made. We're right beside the major arterial road that joins Perth to the eastern seaboard. We have a railway line that goes through our project area, a natural gas pipeline that's currently empty looking for customers, potable water pipeline, plus we're also only 45 kilometres away from the only toll milling nickel concentrator in Australia. And that's a facility that right at the moment has an annualised capacity of 1.6 million tonnes, and it's got one customer called Mincor. Mincor, you may be aware, is on the cusp of potentially being delisted through the acquisition by Waugh. Our project area is on already granted mining tenure. We've got all this infrastructure we can leverage off. We both have the really, really rich nickel history, but we've also got a growing lithium expectation or lithium presence. We've got 3 major projects of lithium in close proximity to our project area. The Red Industrial Minerals Mount Marion project to the north, Lithgow's Bald Hill project to the east, and yet another project that's been subject to a little bit of corporate action of recent times, Essential Metals Dome North project, which is to the south of us. Essential Metals were subject to the takeover bid, which was quashed about 3 weeks ago, with Mineral Resources taking a 20% equity stake. So corporately, a very, very interesting aspect to our particular part of the world. We do leverage off a very, very large resource exploration data set, which we'll capitalise on. In terms of the actual company itself, our board of directors, we're not biased towards geology, we're not biased towards mining, we're not biased towards any corporate aspirations. We are focused on getting our project into production, and we have a diverse array of expertise at board level in order to be able to move that project forward. Share price performance has fluctuated depending on what period of time we're in. We've stabilised at about 30 cents, which is a pretty good outcome for us. But we're very, very keen as we see ourselves make that transition from an explorer into a developer. We see an uplift in value. It's all about, from a nickel perspective, it's all about the resource base, which we're very unique in the sense that we've got 12 separate resources, but they're all in close proximity to each other. It's effectively a total of 15 kilometres from the southernmost resource there to the northernmost. So our project is able to be upscaled without us having to duplicate overheads. So our ability to get our production rate up is readily achievable, whereas many others where they've got satellite operations, they have to duplicate their management, they have to duplicate their infrastructure. We can achieve those economies of scale. Our first project, which is Armstrong, you can see that we've got that to a high level of into the indicated category. That's the challenge that we face. There's a massive investment in drilling in order to be able to increase our levels of geological confidence from inferred to indicated. We're progressively moving that. The second band you see there, Gillett, Widgie 3 and Widgie Town site, is our area that we collectively refer to as Widgie South, which will be the second project that we believe will develop through the course of time. We recently announced a resource upgrade on our Gillett project. We moved just under 1 million tonnes from inferred into indicated. We know a lot about this resource base now. We know its the good points in terms of its nickel endowment, its cobalt, its copper endowment, and the PGMs contained. We also know about the things that are very, very important in terms of our customers, such as arsenic, iron and MgO. I'm happy to say that this one ticks all the boxes. Gillett's part of a much bigger project area. Gillett represents that green line there, which is started life when we first listed about 800 metres long. It's now in excess of 1,350 metres in terms of the mineralisation we've identified. Second project area there is Widgie Town site. Third is Widgie 3. Which will be our next project. We have been really focused on infill drilling, but we've had exploration success. Mid last year, we discovered a new zone called Gillett North. However, in very recent times, as recent as yesterday, we announced a significant find. We thought it was cut off in a southerly direction. However, we revisited the data and drilled another hole, and lo and behold, we hit 30 metres at 1.17% nickel, which is a great outcome in an area that we thought was previously deemed barren. Now, this is the steak knives section of the presentation. You see the hole, you can see the hole shown on the right-hand side. It was an RC intercept. It actually stopped in mineralisation. We did that because it was supposed to be a pre-collar. It wasn't supposed to hit nickel mineralisation. So we drilled it and then subsequently assayed it, and lo and behold, we've now completed the diamond portion of the hole, and we do have mineralisation, but I haven't got grades here for us. So that's the steak knives moment. What makes it really significant is that it's only just below the barren hole that was above it. So it really opens up this area here, and we're now drilling in order to be able to see what this can do to our endowment. Armstrong, we're rapidly advancing our Armstrong project. We've done a scoping study. We've got the resource to a high level of geological confidence. We've completed all the mining studies, all the technical assessments, have completed a lot of work on the ground, and this project's rapidly approaching a position where we can develop it. A lot of work's been done. Probably one of the biggest pre-production activities is dewatering the open pit, because there was a substantial amount of water to remove. We've done a lot of work in terms of understanding the mineralisation from a metallurgical perspective. Environmental permitting is well advanced, with key approvals or key applications about to be lodged. All the aspects. The one bit that's missing in the jigsaw puzzle is securing an offtake agreement with BHP Billiton, which remains work in progress. Now, a little bit about the lithium. We made our first announcement on lithium in October of last year, which represented some rock chip samples, which provided great promise, and we've seized that opportunity because with the outcrop that we saw on surface, we saw the opportunity here for a DSO opportunity. So since that point in time, we've rapidly advanced this project, find the mineralisation of very close spaced drilling. Fortunately, the geometry is very, very favourable to cheap mining, dipping very, very shallowly to the west. Nice substantial 10 to 15 metre wide pegmatite unit with consistent grades. We've advanced the project significantly since this initial reconnaissance drilling. We've announced a maiden resource, which was done just over 2 months ago. We've now wrapped a mining shape around this, and as recent as Friday, we lodged a mining proposal with the regulatory body in Western Australia, which I'm confident will see us be able to start mining early next financial year. That's only 2 months away. Albeit the grade of the overall resource is relatively low in comparison to many of our peers, there's many other positive attributes to this project. Very, very favourable metallurgy, and that's probably been confirmed to us by the fact that we've got a competitive process going on with off-takers, which is rapidly gaining momentum. So I feel very, very confident that Faraday will figure prominently moving forward. Faraday is not finite. It's not just confined to this initial small resource. We've done step-out drilling now, some 400 metres to the north, and drilling down dip. All of these holes have pegmatite in them, but we're awaiting assays. So indeed, we've looked at Faraday from a very much a short-term enabling step, but there is a bigger story at play. The company's very much singularly focused. It was nickel to start off with, now it's nickel lithium. We will, through the course of 2023, definitely have a new underground mine mining nickel ready to go. Our Widgie South area will be subjected to scoping study, and that will provide an adjunct to essentially underpin a much longer term nickel mining future for the company. Faraday, which was a gift from heaven, so to speak, we've treated that with respect and pushed that along as fast as we can, and that could become the enabler for us. So I look forward to the remainder of 2023. It's going to be a very, very exciting period of time for the company. And I probably will leave you to reflect on those various aspects. It's going to be an exciting time. Thank you very, very much.
Thank you very much, Dave. You did a good job, admirable job, bringing up their rear, and the room is still really, really nice and full. We have one last presentation. Look at this fella up here. Up he comes. I asked AI last night. We were having a bit of fun as we sat around the dinner table, and most of you know that I like to cyberstalk the people that come up onto stage and learn a little bit more about them, rather than just the fact of where they went to school, uni, and the projects that they've been involved in, because I want you to have some sort of a buy-in with them and some sort of, because as we said, that's the real benefit of this conference, is that you get to go out and you get to make those connections, investors to explorers. I asked AI to write an introduction for you, young sir. So I'll give you the intro. So we've got David here. David's worked with the Australian Parliament House as senatorial staffer, helped to edit an academic book. You can see at this point I thought, gee, I need to find something a little bit more catchier to introduce him today, as he's going to talk about the critical minerals, the next big thing for Australia. So David Royal, here is part of a one-page expose on you. I'll make it really short. Actually, you know what I need to do? I need to go back and get my glasses, because at this point of the day, after spending 10 hours watching this, it's a bit hard. So it says, throughout this speech, he will challenge conventional thinking, explore novel strategies, and help to equip you with the tools needed to navigate the intricate landscape of resource allocation. So let us embark on this expedition together as he takes to the stage, where numbers and narratives intertwine, and where the insights we uncover will empower us to make informed decisions that shape our collective destiny. You feeling it yet? Wow. It keeps going, wait on. Join him as he unravels the untold story of critical resource management, a story that holds the power to transform industries, communities, and the very fabric of your future. Thank you, and let the exploration begin. How's that?
Wow, I mean, what an introduction. Thank you for that.
Hence, I didn't use it for the rest of the intros at all today, but there you go.
No, thank you for that. That was a very warm and welcoming introduction. My name's David Royal. I understand that we're all rearing off to get to the conference drinks, so I'll try to keep it pretty sharp. I'm a senior consultant for CRU Group. Today I'll be providing an overview of the critical minerals opportunity here in Australia. The title here should say maybe the next potential big thing for Australia, as I think there are more things that need to be achieved before we get there. Just the usual legal notice there. A bit of background to the company I work for, CRU. We're a provider of market intelligence and analysis on the global metals, mining and fertiliser industries. The company was founded over 50 years ago, and we have a global reach with offices in key supplier regions such as Australia, but also in key financing and consumer regions such as UK, US, China, Singapore and other offices as well. We offer a range of services to our clients, including lenders market reports, market analysis and price coverage. We cover a wide range of commodities, which you can see there on the right as part of our regular coverage, but we also cover a number of other commodities on an ad hoc basis. So getting underway, what is a critical mineral? I've coloured some of the metals and minerals here according to the list of critical minerals from Geoscience Australia. There isn't really a uniform list of what exactly is a critical mineral, with each country having their own list, even some of the state governments in Australia having their own lists. Critical minerals is a relatively new phenomena and are essentially elements which are critical for the functioning of our modern technologies and economies. And they also carry some risk of supply chain disruption. Critical minerals have quickly become a key concern for governments, and many of the minerals you see here are absolutely essential if decarbonisation is to become a reality. There is a bit of a mixed bag in terms of the demand outlook for these minerals. As you can see, lithium demand is expected to continue to rocket. with demand expected to double or so over the next 5 years. The growth rate for nickel, which you can see, which is essential for electrification, might be tempered a bit by its role in the stainless steel sector. If we look solely at nickel sulfate, for example, which is the battery chemical form of nickel, the demand growth rate is a lot higher. And this is likewise for vanadium pentoxide for batteries and others. The other key point here on the slide is to show where we are now in terms of our exports. Almost half of financial year 21-22 exports from Australia by value were either iron ore or coal, the so-called bulk commodities. These are really the backbone of Australian exports, and we see demand for bulk commodities reducing over time, as you can see there at the end. Demand for seaborne thermal coal in particular is expected to come down quite a lot. However, met coal and iron ore demand is expected to hold up relatively well. While they are expected to come down, we still think that there's going to be a strong support base from the economy coming from these bulk commodities. However, the exciting part and what we're all here for today is these other critical minerals, which are the real growth story. So why has demand taken off in recent times? Well, in short, it's decarbonisation and geopolitics. This is a map of countries that have implemented emissions trading schemes or carbon tax regimes. If you looked at this only a couple of years ago, the map would not be anywhere near as coloured in as it is now. Australia has recently legislated a 43% emissions reduction target to be achieved by 2030, which will be enforced by the recent safeguard mechanism. And this is clearly going to require a whole lot more green metals in order to become a reality, which is what we're all interested in. So how are governments proposing to achieve this? Well, there is the large geopolitical incentive, as I've mentioned. Geopolitics has become inextricably linked to the critical minerals sector, driven by tensions between the West and with China or with Russia. The war in the Ukraine has exposed the vulnerability of supply chains, and governments have become a bit more protectionist in order to try to boost domestic energy security. China is clearly the key midstream processor of metals and minerals. A disruption in trade with China would be catastrophic to Australia's decarbonisation goals and the overall economy. And there is also some legislation that has been passed to try to boost downstream domestic production of critical minerals. So, for example, in the US, everyone knows the Inflation Reduction Act. It doesn't do too much for inflation, but it does create tax incentives for OEMs to build up battery manufacturing and incentivise upstream mine development in places like Australia. Procurement of critical minerals from China or Russia is explicitly excluded, as they are countries of concern, so-called, and this shows that the geopolitics angle is a clear driver of this strategy. The Australian government too has made some good efforts on both the federal and state level. Mining and metals and minerals rather is generally governed by state level governments, but the federal government has outlined a critical minerals strategy. The New South Wales state government as well has outlined a similar strategy, as do most of the other state and territory governments. Overall, there are strong incentives to invest in the critical minerals sector from a demand point of view. Governments globally are helping to facilitate increased production, but supply will ultimately have to come from the industry, from people in this room today, meaning that industry will really have to be at the forefront of any critical mineral strategy and decarbonisation. Just talking briefly now about the outlook for batteries. EVs are a key part of the story for battery demand, but there are other sectors like the battery storage sector, which are also set to take off. We expect EVs to account for around 66% of light vehicle sales by 2040. This presents itself as a massive opportunity for minerals such as lithium, nickel, cobalt, and even phosphate, which are all critical elements for modern day EV batteries. We expect total battery demand to continue increasing at a rapid pace, reaching around 3.8 gigawatt hours of total demand by 2040, with most of this coming from the EV sector. The energy storage sector is also set to grow at a rapid pace of around 15% and continue to do so past this forecasted period, as it will become a central part of the economy once we shut down fossil fuel baseload power. Focusing now a bit more on Australia, as I discussed, there is the legislative framework to push reliance on green technologies and renewables. You can see on the chart there on the left that there is a high degree of concentration of midstream battery material production in China. This dominance is expected to come down a little bit over the next 5 years, but they're still going to remain a key supplier of green metals. A lot of the diversification is not really possible without Australia. While China is the key midstream processor of the materials, Australia holds a major proportion of global reserves for critical minerals, as we can see. For some minerals, once again, going to pick on lithium, Australia holds a key position in the industry already, being the largest upstream supplier in the world. Once upon a time, everyone thought that the extraction of lithium from pegmatites was going to be uncompetitive in comparison to extraction of lithium from brines in South America. However, that's since been proven wrong, and the industry has become very strong here. Australian spodumene is now the largest important source of supply to the battery industry, and the South Americans have been falling behind a bit. It'll be interesting to see what will happen with the recent legislation passed there. Lithium industry overall, and a lot of these critical minerals are a big success story for the Australian mining industry, and they will continue to play a big role globally. I'm not going to go into each of these minerals individually, but they all have their own stories and role to play moving forward, which we've all heard about today, and I'm sure you all know very well. So why would anyone want to invest in Australia? Well, according to the Fraser Institute, Australia, and Western Australia in particular, are the most attractive mining jurisdictions in the world. While WA is a real leader, both in Australia and globally, the other states aren't too far behind and have been making a good push to support the industry. Other global competitors with Australia, such as Indonesia, South Africa, China, etc., are less attractive from an investment perspective. Nationalisation of industries, strict regulation all carry some sovereign risk, despite these countries often being very attractive from a cost or a resource perspective. The chart on the bottom there is from the WA government. So they define critical minerals here as lithium, nickel, cobalt, manganese, copper, and rare earths. This is only for WA, and you can see the growth there in 2022. Total sales reached just over 25 billion Australian dollars, just a massive growth rate you can see there in the industry. Putting the sales into perspective, you can still see that sales are a bit lower than iron ore, but this year was pretty good for iron ore. High prices and production was pretty good. But we think iron ore is going to continue again to play a very important role in the economy moving forward. But the hope is to really grow that column there on the left to be even bigger, providing jobs and economic growth to the country. So just a final slide here for me. I think key to achieving that growth in the critical minerals sector is moving downstream. Higher levels of value add can be achieved through developing downstream capabilities. Australia is typically focused on the dig it and ship it side of the industry, and Australian manufacturing has been offshore due to high energy costs and competition from overseas, and those energy costs in particular will be a problem moving forward that need to be solved. On the capex side, it's still a bit expensive, but what we are seeing from our perspective from these new lithium hydroxide refineries popping up in WA is that they can be competitive on an OPEX basis globally. Given the natural resources located in Australia, we could account for an even larger portion of that cost curve there. Not only lithium, but I think Australia has all the composite materials to get to PCAM or CAM. There are guys in Australia trying to achieve this, but I think at this stage, maybe targeting gigafactories might be a bit ambitious. But I think I can't see any reason why battery chemicals, PCAM, CAM can't be competitive in Australia. So overall, I think Australia should focus its efforts on where the highest returns will be, and seek out the most prospective opportunities, because there is a lot of value add to be gained. And overall, critical minerals could be a game changer in Australia, but it could pass us by if we don't seize it. Just going to leave it there. Thank you everyone for listening. I'll be around in the conference room if anyone would like a bit of a chat.
Dave, thank you so much. Excuse me for ringing the bell on you just then. I really appreciate it. Appreciate your patience as well. Put your hands together, Ian, for one more time, please, everyone. Did a great job. As you move your way out through the right three doors, and I know I've lost you, go and enjoy yourself, enjoy the company. We start tomorrow at 8:30. It is a slightly longer day by 10 minutes. We finish at 5:30. Today is drinks. Tomorrow night is cocktail party. So if one has a frock, one should bring it and get changed. Enjoy the evening, and you've got lots to talk about. Thank you, everyone.
All right, Boyd. So, no, we're good. We're good. I'm better in the dark.